Hi, I'm Patu from FreeFinCal, and in this video, I want to talk to you about banking and PSU debt funds. Many people think that they are a safer alternative and they will be free from credit risk problems that other funds have. I had already written a post on this and I already made a video about this, but I thought I'll reiterate this point with a fact sheet of Franklin India banking and PSU funds. I noticed this when I was making the Plumbline, my handpicked list of mutual funds that's also available for download and use from the main menu of the website. So you can have a look at that. Before I get to that, a couple of announcements. I'd already said this before, I think it's worth saying it again. You can follow FreeFinCal now on Google News. If you have Google News app installed on your phone, you can search for FreeFinCal in the search bar and you will see it as a news source. Click on that and you can follow that. Just click on the star and you will be able to see get a nice updated view of all the articles of FreeFinCal. I have it in dark mode because of interference with the screen. So if you the beauty of this is if you click on that, it's very fast, and if you click on that, you will be able to scroll the articles. Scroll across from move from one article to the other horizontally like that. So to give that a follow, I'll leave the follow link in the description box. I love dark mode in websites. In fact, to protect my eyes, I can't do it in a Mac. My Mac is old. In the new Mac you can do it, but my Mac is old. But in a Windows I have turned on the night mode, so my screen will be has a big red tint that has helped my eyes. I have dry eye problem because of the medication I take. So I have been able to handle the dry eye problem by making the screen kind of reddish, removing the blue light. But I also like the night mode. Whenever on YouTube I have night mode enabled, on Twitter I have night mode enabled. Facebook doesn't have a night mode, but I wanted a night mode for FreeFinCal. In fact, I would prefer to have it permanently on, but I asked in Twitter, and some people said they like it, some people said they don't like it, and some people said a choice should be given. So I thought I'll give a choice. You can, I hope you can see this black dot right here. If you go to FreeFinCal and click on the black dot, you should be able to convert the site into a night mode page, and you can have a look at it. If that's what will work for you, you can. I mean, it's nice. It's easy on the eye. Probably, in my opinion, it's easy on the eye at all times. Some people say it's easy on the eye at night times. If you unclick that, it will go back to the old mode. So do give that a try. I am not sure if I can see that button on mobile yet. I will configure it. I'm still learning things on this. All right, so that's about night mode. I've uploaded the second lecture today for the goal-based portfolio management course. You can still sign up for it and get a 60% early bird discount. The description has the link as well as the first comment. I will launch the course hopefully by Friday or Thursday next week. In a week, I will email everybody about how to get into the course and so on. So please do give that a go. Let's get to this. I don't have much to say. It's just that my sincere and humble request to all mutual fund investors is to please spend some time looking at the fact sheets of your mutual fund. You have to read the scheme document, that's fine, but the key memorandum information, everything. But also, after you start investing, please look at the fact sheet. At least in the case of debt funds, it's mandatory because they may change style subtly and you may not know. So first of all, let's take Franklin India Banking and PSU Fund. You know that I have a Franklin bias when it comes to debt fund, but this fund is not part of my plumb line, and the reason for that is that in fact no banking and PSU is part of my plumb line, and the reason for that is, see, if you look at the portfolio, this is the November portfolio. Everything pretty much it's nice. It's all so there are some sovereign bonds, there are AAA bonds. Everything is fine. Some of them are AA. For example, Andhra Bank is AA minus. ICICI Bank is AA plus. SBI AA plus. That's all right. Bank of Baroda. That's all right. Those are banks. So Syndicate Bank is A plus. But okay, you can say banks. Even there is a credit. Of course, when there is a credit downgrade, the NAV will jump down, but you can say there won't be any default. That will be some volatility which you can manage, but there won't be any default from banks. But the problem is, take a look at this pipeline infrastructure. As far as I know, to the best of my knowledge, Pipeline Infrastructure Private Limited is a private limited. It is not a banking bond. It is not a PSU. It's a proper privately owned company, and it may be CRISIL AAA, but the problem is it is a private bond, which means that it can degrade and it can quickly get into default. It can. I'm not saying it's going to. So there's a danger of that. Of course, it's only 1.47% of the portfolio, but then the problem is the lack of style purity. See, when I say banking and PSU means that fund should have only banking and PSU. It should not have other things. I think SEBI rules say 80% banking and PSU, if I'm not wrong. That is not correct. It should be 100% banking and PSU with some cash. There should be style pure. That I keep saying, we have this masala problem. We have this khichdi problem. Um, if for content for children means it should be content for children only. You should don't mix adult problems into content for children. That's a big problem that we have in India. Same thing in our debt funds. They will not. I mean, that 1.47% can default. Then that 1.47% could grow to 3%, 4%, 6% if the fund manager is not able to sell it out. So first of all, please be aware that banks and PSU bonds can also suffer from credit downgrades. This will affect the NAV. Second of all, please understand, look at the modified duration or the average maturity of the portfolio. Look at the average maturity, it's 4.6 years. The modified duration is 3.41 years. That means if there is interest rate changes, this NAV will fluctuate quite significantly, which means that this means that you, even if you buy such a fund, you should buy it only for the very long term. So you should not buy it for 2 years, 3 years, and so on. It's very risky. Third of all, you should understand that every banking and PSU funds can hold like a masala. They can hold some private bond like this, and that can be a trigger for credit. That can be the source for the credit event. The default, not the downgrade, anything can happen, but the actual default is very high in the case of private bonds. In the case of banking and PSUs, you can say even if there's a credit downgrade, the government will somehow manage to save them, and so on. Some blah blah you can say and satisfy yourself. So this is the problem. The lack of style purity is very So I don't want to say nobody can call banking and PSU debt funds a safe option. Then they are not at all. In fact, if a banking and PSU bond suffers a credit event, the shock will be even more for the investor, and that's the reason why I don't want to include these into plumb line. So, if at all you are interested in banking and PSU funds, have a look at the portfolio, give the fund some time, understand, check, look at the scheme document, how much it can hold other than banking and PSUs. Look at it, and if you're okay with the extra one or two private bonds that it holds, then only you invest in it. Don't take lazy decisions based on star ratings, returns, and etc. You have to dig deeper into the fund. So that's what I wanted to say. Catch you again later. Bye.